why digital assets are non-negotiable for traditional finance. That's the title. And a personal note here that this is the 7th time the Crypto Valley conference happens. And back then in the early times, we had like, oh, there's a bank on a panel. Wow. Ooh, then the rumors went around in internal groups, there is a bank on the panel, right? And now all of a sudden, I can still say, wow, the panel is packed with banks. We have several banks and financial institutions, and our amazing technology seems to have found a product market fit in the financial industry. So I'm really excited about the next panel, and they are going to discuss exactly this topic, why they are here and why it matters for them. In the moderator role, I would like to welcome Niki Csanyi, who is the Executive Director of the Crypto Valley Association, and most importantly, the key and head organizer of the Crypto Valley Conference since years. Please put your hand together for our moderator.
Thank you. Thanks, Benedict. Please, my panelists, take your seats. And Benedict stole my thunder a little bit, of course, with how many banks we have on the panel. And I was just going to say that over the years of the Crypto Valley Conference, we have been discussing a lot about why TradFi and banks should get on board, and now I'm so happy that we no longer have to do that, and we'll definitely not be discussing that on this panel, because we'll be focusing on the tangible learnings of what these banks have been experiencing so far since 2024, since they started offering digital assets. And of course, this is a great panel, so, you know, a little nepotism, I just took it, I said, I will moderate this. You know, perks of being the conference organizer. Anyways, I would love to start with asking my panelists to introduce themselves. Where do you work? What is your role? And maybe a fun fact, when did your personal crypto journey start? Like what year, how did you introduce yourself to crypto? Did you buy Bitcoin? Do you own any digital assets?
I do own some. Yes, my name is Serge Kaulitz, heading digital assets at Luzerner. My journey started actually at 2016. Blockchain everywhere was the topic, so yeah, excited for the panel.
Hi, good morning, everybody. Peter Hubli, head digital assets at Zürcher Kantonalbank. My digital assets journey started not with Bitcoin, started with tokenized assets. They're still not here. So my first touch point was in the area of funds, and I was involved in a POC from our bank with funds DLT to tokenize funds, and still ongoing. And I think that's interesting. And Bitcoin came later.
Right.
So Dalal Buhejji here. I think I'm one of the only non-bank on the panel. So I'm the executive director at the Bahrain Economic Development Board. We worked very closely on Bahrain's crypto adoption journey. So I see it more from an ecosystem development and attracting crypto players to come and set up in Bahrain, but also encouraging banks and working closely with the banks and working with digital assets and crypto players.
Kasper?
Cool, so Kasper Luyckx, I work at Crypto Finance. We're also not a bank, but we help banks on their journey to get into the crypto space. We're a full subsidiary of Deutsche Börse Group, based out of Zurich, but also have offices in Frankfurt. And within Crypto Finance, I lead the infrastructure business. So we provide infrastructure to banks to store digital assets, and we use that ourselves as well. And I started in crypto back in 2017 when I got some great investment advice from a friend to buy Ethereum, which I did, which crashed quite a bit shortly after. So I did what every savvy crypto investor did. I bought the dip, and I'm still buying the dip. So yeah, still here.
Thank you. My name is Sandro Brühlmann. I work in the digital assets team at PostFinance, one of the largest retail banks in Switzerland. And before that, I was in the asset management industry in Zurich. My start was, I think, also in 2017 into the crypto digital asset space. And we also structured investment products in the asset management business line there. So quite a few time already in that industry.
Great. And yes, as you can see, it's a well-rounded panel. We're going to have different perspectives. Of course, 3 banks, an institutional service provider who enables banks to provide services, and of course, Dalal is bringing a governmental sort of top-down perspective of how you can push an industry and how you can incentivize people to adopt technology that's new. And I think that's a very difficult job to do, but it's commendable. So I'm looking forward to hearing from you. So after introductions, I would like to jump in. I asked all of my panelists to break out the numbers, because what I don't prefer at a panel is to talk high level, very lofty, but then not provide tangible information to the audience. So I am going to ask first the 3 banks, or the 3 gentlemen from the banks, if you can tell us a bit about your first year of experience or year and a half. You can tell us when you launched digital assets, sort of what you were offering, what have been really the takeaways so far, what have you experienced, volumes of clients, and if you have something that's an outlier or something that you were surprised about, that would be fantastic, because I think everybody would love to hear. Serge, do you want to go first?
Yeah, sure. So we started our offering at February 24 with trading, buy and hold, also planned transfers. And the good news is it's feasible. Also transfers on the regulated framework we have. That was one of the key things we figured out, right? So also what I think about the last 1.5 years we already are operational is it runs smoothly. So the technology is not that much an issue as we think. I think it's more about education and how to operate with risks. So it was for us in the start a risk-based approach for everything. So we do our own custody and AML and 24/7 trading. So we had to have managed risk really well. So a lot of board meetings about that. And when you go over them and figure out all the risks, you have a good base to go on with the topic. Second, one of the key things, I think it's also education internally of the board, of the customer relationship teams, and also the customers. And that's actually really hard. So we have a execution-only offering, and we can't say that much. But we have to explain it to our customer relationship teams, how it works, what could be the risks on that. And I think that's one thing we still have to do and to manage in the future. And yeah, we go on from there.
Okay. Pedro, I know you have numbers for me. I put you on the spot.
Again.
No, I mean like,
we didn't talk about it, yeah. No, we went live with our offering 8 months ago, and the good news are the bank still exists. So that surprised many people in the bank, honestly, because they expected, whoa, if we go live, then it's the end of the bank in no time. So we're still here. Nothing happened at all. What I can say is after 8 months, we were a little bit surprised because we expected a different client segment. As many others, we expected that we have younger people and more from the retail corner than from the private banking, because the advisor in private banking said, before we went live, they said that my clients doesn't want it. So what a surprise after 8 months. We didn't reach the young guys because they are still with Coinbase, with Swissquote, with Bitpanda. But we have seen a strong demand from middle age. So the average custody investor is between 30 and 50 years old, and it's male. The female investors are younger than the male. It's also interesting. And what we have seen as a result of that is that we have much higher ticket sizes as expected. So that was a big surprise, and we see, because we offer the service not only to our clients, we offer it also on a B2B basis, and we see in our partner bank, Zürcher Kantonalbank, same. So we see middle-aged people which invest, and what is the most surprise for us is that we reach clients which did not do anything with us before. They just hold cash with us, and we tried to sell them funds, equities, bonds, everything, but they were not interested, and now they jump in as soon as we offer Bitcoin and Ether. So it's interesting to see we have a significant number of clients which has had to open a portfolio with us because they didn't have it before.
That's so interesting. And I'm sure it was a pleasant surprise, right?
Absolutely, yeah. That was a number which we didn't have on our screen before, and it was really surprising us because we tried in the past, we tried anything to motivate them to invest their cash, and without any success. And with Bitcoin, it works. So that's anyway, maybe the last finding, a very, very strong dominance of Bitcoin. We only offer two currencies, but we have a ratio about 88% to 12 between Bitcoin and Ether. So very strong dominance to Bitcoin.
Very cool. I'll let first Sandro also answer, and then I want to circle back to you, Serge, if you see something similar as well, because the numbers are very powerful.
Well, unsurprisingly, we share very similar experiences as the two other banks. We went live with our offering in February 2024, so last year, with currently 16 coins in our offering. We expanded the services with native Ethereum staking at the beginning of this year, so in a retail format, which is kind of a world's first as how we do it. And we keep on, of course, expanding the services, also looking at crypto transfer, so depositing and withdrawing of assets from and to exchanges or private wallets. So that's definitely on the roadmap, and more to that coming soon, hopefully, and also new coins. When we look at the customers from a demographic view, I would say the typical customer that we have for crypto client is between 35 to 40. He's male, and geographically they are from Bern or Zurich. So that's the typical investor that we see in our offering. And I think the most surprising number is that 55% of these clients, of these crypto clients, are first-time investment clients. So crypto is really the entry point and not the end game of investing for these kind of investors. And this was really surprising to us, but it's a very nice number, because there you see also the whole cross-selling potential within the bank that you have, just by offering crypto.
Indeed. And Serge, do you see the same trend?
I see same trends. We also did demographics beforehand, the project. We expected to have customers around, well, 20 to 35, something like that. And now we experience around 40. So, and that's shifting actually from the start, from the offering, younger clients before. Now we get more into private clients and so on, and have an average age of 44 actually. And also maybe to the baseline here, why it's non-negotiable, we experience right now actually already an adoption of all trading clients we have from 4 to 5%. So after 1 year, we are pretty satisfied about that, and it's still growing. So we see a lot of ETFs and research and adoption and talking about those assets, and it's happening. Yeah.
That's very cool. Actually, I had an interesting conversation with Fred Greger from Cardano 2 days ago, and he was mentioning the same thing to me. I can't recall the bank, but he said they had a conversation, and basically there's a new study or some research saying that a lot of lower and middle class people who have no previous savings, they are not very concerned about the future in terms of, oh, let me buy some index funds for when I retire. They own absolutely zero investment in other assets, but they want to buy, and they have bought Bitcoin and Ethereum. And then they tell them, well, that's actually a saving, you know, like you're actually saving for the future. And they're like, no, I'm just holding. So it's very interesting that mentally people on a lower and middle class wages don't necessarily see digital assets as sort of investing for the future, as for retirement, but they want it. And they're really interested in getting it. And that brings you a whole set of new customers that otherwise probably wouldn't invest, as you said, in mutual funds, index funds, stocks, bonds. It's a really interesting dynamic. And I wonder what's the psychology behind it. Is it the novelty? Is it something risk-related?
No, I think first, why so much young customers get into cryptocurrency is it's so easy to hop on. You get an app, you can onboard, and then you can buy those things. It's much more complicated to get a bank account. And that's what I see is also the real challenge for banks to get these offerings to clients, make it easy, gamification, and so on. That's what you actually have to do to make it easier. And it should not be a complex trading tool. It should be easy to onboard and also satisfy a young customer. And I think that's the main reason why a lot of young people are getting into it.
Interesting.
But just in case of expectation management, we have to say that for sure it is. We are quite successful. We have higher ticket sizes, as I mentioned, but that is the good story if you are in Team Crypto. But if you are not in Team Crypto in the bank, then you see, okay, let's fairly speaking, what are our assets under management and how much of it is in crypto? And that's really, it's only a footnote and nothing else, you know. It is a niche and it will keep a niche, I guess. So we do not change our business model only because we have had good success in this crypto business. So it's for a universal bank, it's not the game changer at all. It is interesting and you attract new clients for first investment, as Sandro said. That is very nice and it's good, but overall, it's
a small
niche.
piece of the pie.
Absolutely,
yes, niche.
Yeah.
And that's something that I want to touch upon later during the conversation as well.
But maybe just to begin here, what we have seen with some of the banks who don't have offerings, they see sometimes significant outflows that are somewhat material to crypto platforms. And I think that's also one of the reasons why a lot of banks are considering to add the asset class. But also we have some data from some larger private banks where they looked at their ETF flow and they saw that over the last year, the most traded ETF on their platform is actually IBIT.
Wow.
So there is quite a lot of interest also from kind of the financial world or like existing investors to get into this asset class. And they might do it via traditional means if they don't have access or it's harder to access the native asset. But it's also the most successful ETF since launch. So from the financial world, there's a very big interest into it. And these products also within the existing financial system do grab quite a bit of attention.
But I also think it's very media-driven, right? I mean, when was the last time that you read about the MSCI World in 20 minutes or something like that? I mean, crypto, when prices go up, it's a hot topic, so people want to jump on the train.
Yeah.
And they always see the high upside potential, right? And many of the investors who are really, or the younger investors, they put all their money into crypto. They don't diversify, they put all eggs in one basket, right? And that's the reason, because that there's a lack of knowledge regarding investments. And although crypto might be the entry, it can't be the end, right? And as Pedro said, it will remain a niche market, but we are not just talking about crypto, it's about the blockchain technology, tokenization, and then the traditional assets come into place, right? So it's a shift and it takes time. But just putting everything into crypto, I wouldn't advise that to anyone. So.
Yeah, we don't do advise that either. Definitely no investment advice here, but also I agree with you. A balanced portfolio is what everybody should be looking or striving towards. Dalal, so you bring a very different perspective from the gentleman here. You know, your job is to promote the industry in your country, the economy. You probably realized a long time ago that digital assets, you know, blockchain, crypto as a overall, you know, technology is very important to Bahrain. So how do you see for banks, traditional financial institutions, the journey in the past year or two are banks lining up to adopt digital assets and offer crypto to their clients?
So just similar to the panelists here, I started the journey of crypto, and similarly as a country back in 2017. So that's when the regulatory sandbox was introduced in Bahrain, and when we had a number of players experimenting in the sandbox, and one of them was a digital assets crypto player. So that kind of really fast-tracked the knowledge of the regulator, how to better regulate digital assets and crypto. So we introduced the regulation in 2019, and I think what really supported the adoption of banks is the size of the country. Because we're quite small and nimble, we're really easy for us to educate, but also encourage banks to support local players. And they all fall under one single regulator, Central Bank of Bahrain. Obviously, 2019, few banks, were open to it. I would say 1 to 2 banks to start with. To date, if you look at, the banks that we work with in opening bank accounts for digital assets, they go up to 5 to 6 banks. And we also recently, a year ago, attracted a wholesale digital assets bank called SGB that mainly caters to digital assets, whether it's on the banking services, providing different kind of crypto asset products, assets and wealth management services. So you're really seeing that range of services and offerings of banks. Not only that as well, recently our National Bank of Bahrain even partnered with one of our licensees, ARP Digital, to provide digital asset products to customers. So we're seeing that transition. I would say it's less bumpy of a ride than other jurisdictions. And I'd go back to my previous point, because it was a smaller market where people could really engage and see and understand, the opportunity. We as well at the Economic Development Board played a big role with the Central Bank of Bahrain to really educate but encourage local banks to see the opportunity. And another point that I want to mention is that the Central Bank of Bahrain is very well regarded in terms of regulation. So any regulations that they take on board, they really go through the process. So banks would really feel more comfortable banking with the digital assets that are licensed, given the fact that Central Bank of Bahrain went through the whole regulatory perspective to adopt them. I think right now it's no longer about whether opening a bank account or not. It's no longer a discussion. It's more about what bank will offer a new product or new services, and that's what's interesting, and that's what the customers are looking for, whether it's tokenization, stable coins is something else that's coming up as well very soon in Bahrain, payments as well, crypto cards, so that whole kind of diversity in that sector is what is needed. And I think it takes a bank to adopt it and see the journey. And you've mentioned in 8 months, for instance, you've seen how things were quite smooth. It just needs that one kind of, I agree, I'll take it on board, and then it's not as scary, I guess, for banks.
Yeah, I mean, we've been telling banks over many, many years, it's not that difficult. There's institutional great service providers who can help you, regulation, AML compliance, all in place. And then the proof of the pudding that it's working great, it's not the end of the world, doesn't break the bank. So it's fantastic to see. Now I feel like the question is, who's not getting on board? Are they getting left behind? And Kasper, do you see that trend, clients coming to crypto finance and wanting to get on board?
Yeah, so maybe I can give a Swiss perspective, and then I can also add a European perspective. So in Switzerland, I think we already have more than 30 banks with some kind of offering, and there are various different levels of depth of offering. Some have a very basic offering, some are already quite advanced, moving more into staking, lending, huge coin coverage. And I do think that Switzerland globally is still kind of one of the market leaders when it comes to having banks offering native crypto access. And the EU is now following quite closely. So I would say in the Swiss market, a lot of the banks are thinking more around what's next. So I already have an offering. What am I going to do next? Am I going to add staking? Am I going to look at other things to generate yield? I have a lot of investors holding Bitcoin. How can I do something with that Bitcoin? Can I collateralize it? Can I use it for lending? Are there other things we can do with it? And we do see a trend there globally that Bitcoin and also crypto ETFs are becoming more and more accepted now also by banks as collateral, which is good. I think that's really good because if you save into a hard asset, you also want to use that hard asset for the purpose that it's supposed to serve. So yeah, in Switzerland, we definitely see more maturity, people adding more liquidity providers. So, but a lot of the big players are already into the market, and they also enable other players to come into the market. Then in Europe, the market is developing really quickly. They're behind Switzerland when it comes to live offerings. But with the launch of MiCA, we now see weekly RFPs coming in from banks all over Europe. Wow. Italian banks, Spanish banks, Belgian banks, banks in the Netherlands, banks in Germany, really from all over Europe. And not just small regional banks, but also like GSIBs, so global systemic banks also looking into it. They're moving a little bit slower because they really take it very seriously, also from a risk perspective. They don't just have one custody solution, but maybe they have two and another backup even before they go live. So they really invest quite a bit into it to do it properly. But that's also exactly, I think, the role that banks should play in this ecosystem is bring the trust, bring the security, do it properly under the regulation, make sure it's audited, so when people use your service, they can trust it, right? And they know that it's going to be stored safely, it's fully segregated, etc., etc. That's actually what we need as an industry to grow and reach kind of the mass market. Because if you use, I think FTX was mentioned in the past, but if there are intransparent structures, there's loose regulation, people lose their assets, that's not very good for the industry. And I think this is the role that banks will play more and more. And they will also enable Bitcoin and other assets to kind of become a cornerstone of the financial market where you can use it just as any other asset as collateral or for lending or for any other purpose you would use other assets for.
I would just want to add as well, I think banks, the conversation is no longer should we, bank with digital assets. That's not the case. It's more of what should we do to compete with other banks that are banking with digital assets. And I think that's what's very unique. And we see that in conversations. I mean, today, for instance, I'm here with, my colleagues at the EDB. We have Bahrain FinTech Bay, our ecosystem developer, and we have a local bank as well, BBK here. So, you see it's no longer, oh, should we not? It's how can we be creative and capture as much, digital assets to service our clients, and clients actually demand it. And I think that goes back to, you mentioned, who are your clients? It's the young population, and we have very young demographic. So they really would want to widen, their investment pool and their banking services as well.
Yeah. Maybe to add to that, the younger generation, I think the question is not if a bank will lose. I think it's a yes if you don't offer anything in that space. And the question, everybody's free to have their opinion on crypto as of now, right? And I know there are different opinions to that topic, but where we all should agree, and that's a fact, is there will be a generational shift in wealth over the next 15 years, amounting to $80 trillion. That's now going into Gen Y, Z, and X, right? And these generations, they are not used to opening hours, for example. They can buy clothes 24/7 on Zalando. They order their food online. They do everything is online, right? And why should they pay a fee for a bank account, for example, if they can open up a wallet in no time, as many as they want? So the question is not if they should offer it, but the question should be, what's the business model of a bank in the future, right? And as of now, it's offering services, products, whatever. But I think in the future, it will shift to much more in an enabling or a gateway role, where banks allow people to interact with financial services, whether it's their own, the bank services, or from others, right? So they act as a gateway there. Yeah. And there, the technology, it probably will be blockchain technology, I guess. is a necessity. So you need to start now to really build your future model for your future clients.
So if you're a traditional bank or traditional financial institution in the audience here, and your bank or your company doesn't offer digital assets, well, you're behind and you need to catch up.
At least look at the technology.
Okay, so it's here to stay. One quickly before we move on to the next big block, because I also want to talk about not just crypto, but more digital assets, tokenization, settlements, all of these stable coins, fun stuff. I wanted to ask from the three banks, because you have various offerings. So you offer 16 cryptocurrencies, and you are offering staking. Then we have 2 Bitcoin and Ethereum with you, Zürcher Kantonalbank. And Serge, remind me how many? 7?
7, yes.
Okay. So my question is, does it really make sense at the moment? Is there ROI in onboarding more and more and offering? Or right now, if a bank says, I'm offering Bitcoin and Ethereum because that's 90% of my volume, let's just stick to that and push out really fast, would you recommend that to them?
Well, adding a token to the offering doesn't really come with a cost for us. So we want to listen to the clients. We want to see their demand, and the only impact that it really has is when it comes to custody, right, of these different tokens. Then it has an impact, of course.
I can tell
Kasper
you that,
was shaking his head.
I can tell you that removing a token comes with a cost. We had to do this quite a few times, where we had tokens from the previous generation that they were not so hot anymore, but then you still have some holders, and maybe the network completely changes how it acts, behaves, the protocol changes, and you have a lot of cost to keep up with it, and then you want to decommission it, but then you have to reach all your customers and say, hey, we're no longer supporting this asset, please move your asset somewhere else or sell it, and that can get quite tricky. So you do have to take it a little bit into consideration, like how durable is an asset before you decide to list it. And I think especially if you're a bank, most of the banks don't have a business model like a Binance has, where they really want to offer everything that exists, but want to be a little bit more curated. So I do think there it makes sense to be a bit considerate what you list.
I fully agree, and it's not our goal to list as many tokens or any project that we see or that the customer demands. It's really, we do a thorough due diligence on every token that we offer our clients. That's our duty. We need to do that, right? But it's also, we see a demand for yield-enhancing services, such as staking, for example. And if we only have Bitcoin and Ethereum, maybe we can only offer it to Ethereum, right? And our goal is to also expand the staking services. We want to improve the flexibility, etc., that it becomes a savings tool for our customers. And that's why also we add more tokens to the offering.
Makes sense.
I think to add more currencies is more or less a marketing effect. You see it on RFP, how many currencies do you offer, but effectively we see it with us. It's as I mentioned, it's 88 to 12% the ratio. Our clients don't want to optimize their Bitcoin investment. They buy and hold. They buy and wait till Bitcoin is 1 million, then they will sell it again. That's all what they expect and nothing else. And we will add over the next few months, we will add additional currencies, but I'm sure they will battle with Ether about this 12%, and will nothing change on the dominance of the Bitcoin. But what you mentioned before, I think that is really important, because one of the reasons, and just to come back to the point with the banks, of course, it's between 20 and 30 banks in Switzerland which offer such services, but we have more than 230 banks in Switzerland. So we talk about 10% and not more. And it's still, there are some concerns against the cryptocurrencies. And I think there is much more support for the technology and for digital assets. We struggle a little bit with the development on the digital asset side. We have SDX, and we have now BX Digital, which is good, but we are this promised shift from traditional assets to digital assets, to tokenization, is not yet happened. And I always take my slide from the WEF, you know, this very trustful source. WEF 2018 showed the shift from traditional assets to tokenized assets over the next 12 years. And if you go and take this shift, and I showed this slide many times to the senior management because it's from WEF, you know, you trust them. And then you see, okay, 2025, and you see where we should be in case of this shift and where we are in reality. That's a big, big gap. There's nothing happened.
But I mean, I'm now, 8 years in the industry, and every year should have been the year of the tokenization, right? And it really never did really happen. So, but what changed now is, I think the last years, it has always been very coupled to the price of Bitcoin or the crypto ecosystem itself, all these tokenization initiatives. And this is different now. I think 5 years ago, if you started a tokenization initiative within a bank and Bitcoin dumped, you would have a problem, you would have stopped your initiative. I think now it's different. The infrastructure is here and it has maturized. So maybe we see it in the next 5 years, hopefully. Maybe next year is the year of tokenization, who knows?
I still think it moves relatively slow, but we see some, let's say, good kind of spots in the market or some lights. Because you see the big issuers, BlackRock, Franklin Templeton was here. All of
they were saying yesterday that the most boring thing, money market funds, are now sexier because they are tokenized.
I think they're slowly starting to push for it, and I do think you need the largest capital market in the world to be in the game for it to become significant. And they're still lacking behind on regulation. Like in Switzerland, you have a very good framework where you can issue a token as a secure, and the token is the actual security, but you can't do this in the US, right? And so you have always the kind of the adoption of the technology, you have the maturity of the technology, and you have the maturity of the regulation, and you need those three elements before you can really scale it up. And this just takes a very long time. I just hope it's going to be one of those cases where people underestimate the impact on, or overestimate the impact on the short term, but underestimate the impact on the long term.
I really agree with Kasper. So if we don't want to miss a point, 2 points about that. First, to see the big picture. I think Bitcoin is now the 5th biggest asset in the world, under the 25 biggest ETFs in 1 year. So there is a shift from gold to gold 2.0 or in an asset class per se. So we have to consider. The second is the technology. And in terms of cryptocurrencies, I also have the same view as Peter. So we have over 90% of Bitcoin assets under management in all. So there are one thing is the asset, and second is the technology, and the technology also is very important to don't miss. Let's see about stablecoins. Stablecoins had a trading volume per day from $30 to $300 billion. So that's actually the use case we promised with blockchain years ago, cross-border payments. It is here, and a lot of people don't know actually, and we have to be ready. That was our goal when we set up our infrastructure, custody, and so on, to be technology ready. And stablecoins is a huge case right now, mostly in institutional level, not on the retail or other cases. So we have to consider that. And just one point about the implementation of cryptocurrencies. It also depends how you do it. When we implement a new cryptocurrency, we always interact with the protocol. And then comes the point with Kasper say, you have to know how this protocol works, block times and so on. If a migration or governance, something changes there, you have to know that and have to integrate and be ready for that. So it's also a challenge on a technical level.
And I wish I have so many more questions that I had prepared. 4 pages, but we don't have time, and unfortunately. So let's continue this outside, and let's give the floor to Fred. Thank you so much for sharing your insights with us. I think everybody really appreciates it. Let's give a big round of applause for our panelists.